So as you can see at my back, our group choose two company, which is company Spritzer and company Pakistan. So for the MFRS, we choose MFRS 116 and also MFRS 138. So for the MFRS 116, which is PPE, it is as tangible asset written for use in the productions or delivery of products or services for rental to others, or for any business purpose under MFRS 116, it are assets that are meant to be used over time. Okay, MFRS 116 does not apply to PPE classified as kept for sales, investment properties verified at fair value, biological assets related to agricultural activities, or explorations and evaluation assets. The purpose of the standard is to set a standard for accounting for PPE as well as changes as in such investment. The key considerations in PPE policy are the recognition of asset, the assessments of the carrying amount, and the depreciations, variations, and impermanence to be reported in relation to them. Items in PPE should be recognized as asset when it is expected that future economic benefits associated with the assets will flow to the company and the cost of the assets can be clearly determined. Okay, so the first item to note is the cost of a piece of PPE. Two accounting models are allowed under this MFRS, which is the cost of a piece of PPE. Two accounting models are allowed under this MFRS, which is cost model and evaluation technique. So under a cost model, the asset is carried at cost less accumulated depreciation and impairment, while the evaluation technique is stated as is carried as revaluation, which it is fair value at the date of revaluation less subsequent depreciation and impairment, providing fair value can be measured accurately. For the next MFRS, which is MFRS intangible asset. This standard includes the accounting method of intangible asset not covered by another standard. This standard requires that an entity recognize an intangible asset only if specified requirements are satisfied. The standards also describes how to compute the carrying value of intangible assets and the disclosures that must be made. Unless they are protected by another standard, this standard must be applied to account for intangible asset. As defined by FRS 139 financial instruments, measurement and recognition operations for and evaluations of mineral resources. Financial assets are expenditures on the explorations and extraction of non-renewable resources such as mineral, oil, and natural gas. Apart from that, the standard covers charges like as advertising, training, startup, and R&D. So, the purpose of R&D project is knowledge development. As a result, while these efforts may result in a tangible asset, which is such as prototype, the assets intangible component, namely the knowledge buried inside it, so it can take the priority.
Next, I will talk about the example of MFRS 116 and MFRS 138 for a production company. We will look through 4 points of view. First, presentation. Second, subsequent measurement. Third, recognition. And last, disclosure. Firstly, for the presentation, PPE is an important component of non-monetary asset in production business. Second, for subsequent measurement, the production company use cost model for the calculation. Third, the general criteria that be certified based on this company are entity expect to obtain economic benefit from using the asset. Lastly, disclosure. The accumulated depreciation are included impairment loss at the beginning and ending of the period. There is MFRS 138 intangible asset for a person company. Firstly, the function of the right or privilege that its ownership convey to the business enterprise. Second, recognition is the future economic benefit following from the underlying resources. Subsequent measurement, the carrying amount of goodwill has been allocated to the following cash generator unit. And lastly, for the disclosure, the library coffee bar, business and Johnny Rocket have been fully impaired in prior year.
For the second company that our group choose is company Spitzer. For the MFRS 116, which is property, plant and equipment, for the presentation, BTE for company Spitzer is building or factory extension, staff quarters, plant and machinery, motor vehicle, furniture, fixture and equipment, electrical installation and water dispenser. Spitzer company also bear plant which are defined as living plants that are used in the production or supply of agriculture produce and for which there is only a remote likelihood that the plant will also be sold as agriculture produce. So, by providing their employees with high quality PPE, Spitzer companies are less likely to experience contamination in their product through parasites, bacteria, dust, mold and other human-related debris. Next is for the subsequent measurement. Property, plant and equipment for this company are calculated at costless accumulated depreciation and any accumulated impairment losses. Costs included the costs incurred for the preparation of the nursery, procurement of new seeds, maintenance of nurseries for a period of 7 years until maturity. On maturity, for the example, when the bearer plants are ready for their intended uses, these costs are classified under mature durian trees. Depreciation of mature durian trees commences when they are ready for their intended use. Estimated useful life of the mature durian trees has been determined to be 30 years. Capital work in progress comprise buildings under construction and plants, machinery and equipment under installations. Depreciation on asset under work in progress commences when the assets are ready for their intended uses. For the recognition, based on the company selected, there are few criteria that company satisfy according to the paragraph 6 of MFRS 116, which a Spitzer company was expected to obtain economic benefit from using the asset. This was proved based on annual report that Spitzer company have necessary financial strength to continue undertaking huge their capital expenditure investment to develop while maintaining stability in the country food and beverage industry. Next, the costs are most reliably measured. It is also possible that future economic advantage connected with the goods can be evaluated accurately with subsequent expenses if it is included in the assets carrying amount or recognized as a distinct asset as appropriate. For the disclosure, an item of property, plant and equipment is recognized upon disposal or when no future economic benefit are expected to arise from the continued use of the asset. It was expected that the gain or loss arising on the disposal or retirement of an asset is determined as the differences between the sale proceeds and the carrying amount of the asset and is recognized in the statement of profit or loss. For the MFRS 138, which is intangible asset, for the presentation, one of the intangible assets for this company is research and development activities. These activities were undertaken with the view to enhance future economic benefit entities. It was successful R&D that activities result in product and process development that can be exploited to bring commercial benefits. The value of an intangible asset is a function of the right or privilege that its ownership conveys to this business enterprise. For the recognition, expenditure on research activities is recognized as an expenses in the period in which is incurred. It will also meet the criteria which is it can be measured at cost. An internally generated intangible asset arising from development or from the development phase of an internal project is recognized if and only if all the following conditions have been demonstrated, like the intangible asset will generate probable future economic benefits. The future economic benefit also includes the revenue from the sale of product or service, cost saving and other benefit resulting from the use of the assets by the company. Next, the ability to measure reliable the expenditure attributable to the intangible assets during its development. This means the measurement of cost of intangible asset was generally based on its purchase price and directly attributable cost. For the subsequent measurement, intangible assets with finite useful life that are acquired separately are carried at cost less accumulated amortization and accumulated impairment losses. Amortization is recognized on a straight line basis over the estimated useful life of the intangible asset. The estimated useful life and amortization method are reviewed at the end of each reporting period, with the effect of any changes in estimates being accounted for on a prospective basis. Intangible assets with indefinite useful life that are acquired separately are carried at cost less accumulated impairment losses. Intangible asset represent software development costs and it's amortized over a period of 5 years. For the disclosure, an intangible asset is derecognized on disposal or when no future economic benefit are expected from use or disposal. Gain or loss arising from the recognition of an intangible asset measured as the difference between the net proceeds and the carrying amount of the asset are recognized in the statement of profit or loss when the asset is derecognized.
2.3 Difference between MFRS and MPERS. First, difference in business combination and consolidation related standard, which is cost of combination MPERS, is generally measured at fair value of consideration transfer and liabilities assumed. Expenses incurred in connection with the combination are capitalized, while expenses of business in MFRS are generally expenses to profit or loss, except for transaction cost of issuing financial instrument. Goodwill calculation requires remeasurement of any previously held stake to fair value, and NCI may be measured at acquisition date fair value, while expenses of business in MFRS are generally expensed to profit or loss, except for transaction of cost of issuing financial instrument. Goodwill calculation requires remeasurement of any previously held stake to fair value, and NCI may be measured at acquisition date fair value. Next, difference in presentation of financial statement between MPERS and MFRS. MPERS has two statements each for financial position, comprehensive income, changes in equity, cash flow, and notes. No requirement for third statement of financial position. For MFRS, two statement is like MPERS, but MFRS has profit or loss statement. Third statement financial position is at beginning of comparative period when this is a retrospective application, retrospective restatement, or reclassification of line item if material.
For the third, the difference between MFRS and MPERS is financial instrument. For the MPERS, Section 11 deals with the basic financial instrument and is applicable to all private entity. An accounting policy choice is provided for private entity to apply the requirements of Section 11 and 12 in full, or the recognition and measurement requirement of MFRS 139. For the MFRS 139, four category of financial asset. For the first one is financial asset at fair value through profit or loss. The second is held to maturity investment. The third is loan and receivable, and the fourth is available for sale asset. Classification depends on the type of instrument, the intention such as held for trading or held to maturity, and by designation. Next is standard of asset. For the MPERS, the recognition criteria include a probability recognition criterion. For the section 18.4, the standards makes an assumption that for all research and development expenditure, section 18.14, and or internally generate intellectual property, section 18.15, the probability recognition is not met. The expenditure incurred should be recognized as an expenses. For the MFRS, development expenditure of R&D activity that meets the recognition criteria must be capitalized. All research and other development expenditure are recognized as an expenses. Internally generated intellectual properties shall not be recognized as an asset. The last one is all other standard in MPERS. For the MPERS, section 34 account for expenditure on the acquisition or development of tangible or intangible asset for use in extractive activity by applying the PPE section and the intangible asset section. Obligation to dismantle an item or to restore the site is accounted for in accordance with the provision and contingency section for the section 34.11. For the MFRS 6 does not deal with the recognition and the measurement, makes limited improvement to existing practice for exploration and evaluation expenditure, requirement impairment testing of recognition, exploration and evaluation asset, require disclose to identify and explain the amount of exploration for an evaluation of mineral resources.
So, that's all from us. Thank you.